Good morning, children. So, here we are starting with the chapter Final Accounts with Adjustments. And as I told you in the previous chapter that we completed, which was chapter Cash Book, I asked you to revise the chapter Final Accounts without adjustments that we have done for your previous exams. If you revise that, this chapter will become easier because obviously we have learned the format there, which item goes in trading account, which item goes in profit and loss account, and which item goes in balance sheet. So just for a very quick revision, let us quickly just go through that recall that all the direct expenses and direct incomes, that means those expenses and incomes which are directly related to production, particular job or practice, are shown in the trading account. If they are direct expenses, that will be shown on the debit side of the trading account. If there is a direct income like sales, that will be shown on the credit side of trading account. Then secondly, we discussed that all those indirect expenses or indirect incomes, that means all those expenses and incomes which are not directly related to production but indirectly related. For example, distribution expenses, office expenses, administration expenses, selling expenses, etc. All these expenses and incomes will be a part of profit and loss account, which is also known as P&L account. All the indirect expenses will be shown on the debit side of the profit and loss account, and all the indirect incomes will be shown on the incomes and gains will be shown on the credit side of profit and loss account. Then we discuss the third final account which we prepare is your balance sheet, and we have learned that balance sheet is a statement, is a position statement. It shows the financial position of the business. On the left hand side, there is no debit and credit column. On the left hand side, we show the liabilities, and on the right hand side, we show the assets. So this much we have already done in the chapter Final Accounts without adjustments. Now we are starting with Final Accounts with adjustments. So let us understand. Sometimes basically children, what happens is that while posting the trial balances or ledger balances, there are certain areas or there are certain chances when some of the items have been skipped by mistake, or there is an adjustment regarding that. So apart from writing them or showing them in the final accounts, these errors or any other extra additional point are shown as an additional information just after below your final accounts, or basically your trial balance, I will say, not final accounts, I will say trial balance. So some items are somewhere shown sometimes after preparing the trial balance. They are shown as an outside item to the trial balance. They are not a part of trial balance. They are shown outside the trial balance, and therefore those items which are shown outside the trial balance are considered as adjustments. And do remember the golden rule regarding the adjustment, that any item, any transaction which is given outside the trial balance, the rule says it will be shown or it will go on at least two places. Minimum of two it will be shown. That means, or we can summarize, or we can just do the summary part, that all those items which are given inside the trial balance are shown at one place, whereas all those items which are shown outside the trial balance are shown at minimum of two places. Now, as you can read here, the items given inside the trial balance is said to be adjusted because we assume that it is already adjusted, and therefore it will be shown only at one place. On the other hand, the items given outside the trial balance or in additional information, either we say it is given outside the trial balance, or we say it is given in adjustments, or we say it is given in additional information, means the same, will be shown at least in two places on the assumption that it has not been adjusted. So if you remember, while doing the chapter Final Accounts without adjustment, we just discussed one adjustment regarding the closing stock. And even in the chapter Trial Balance also, we have discussed that if the closing stock is given inside the trial balance, which rarely happens, then we will assume that it is already been adjusted and it will be shown at one place only, that is on the asset side of the balance sheet. And if it is given outside the trial balance, then we will assume that it has still yet not been adjusted, and therefore it will be shown at two places. Firstly, it will be shown on the credit side of trading account as buy closing stock, and similarly at the same time it will be shown on the asset side of the balance sheet as well. Now, what is the objective or what is the necessity of preparing such adjustments or incorporating such adjustments? Obviously, as I said, that these adjustments arise maybe because of some errors, or maybe because some items have been left out, or maybe some the basic rule or principle has not been followed. Maybe the business is working on accrual concept, but it has not been followed, etc. So obviously, if such adjustments have not been incorporated, the final accounts, the results of the business will not show the true picture. Therefore, it is necessary to incorporate such adjustments. So as you can see, the objective or necessity of adjustments: number one, to ascertain the true net profit or loss of the business. Why is the adjustment necessary? So as to ascertain, to determine the true net profit or net loss of the business. Similarly, it is also necessary to ascertain the true financial position of the business. Then, to make a record of the transactions omitted from the books, and to rectify the errors committed in the books of accounts. So these are the objectives why adjustment is necessary. Moving ahead, there are, if you open your book, children, and if you come to the chapter final accounts with adjustment, at the very beginning of the chapter there is a list given to you, list of adjustments given to you, and in that list there are around a number of transactions, or we can say adjustments. There are 27 adjustments given in your book, but in your syllabus, according to council, you just have to prepare these 13 adjustments as listed here. That means you just need to see that these 13 adjustments, if these things or these items are given outside the trial balance in additional information as an adjustment, then which are the minimum two places where it will be posted. So which are the adjustments that you have to cover up? Number one, closing stock. Number two, outstanding expenses. Number three, prepaid expenses. Number four, depreciation. Number five, accrued or outstanding income. Number six, unearned income, or we can say income received in advance or pre-received income. Then seventh point, bad debts. 8, provision for bad and doubtful debts. Next, provision for discount on debtors. Next, abnormal loss. Then goods distributed as free samples, drawings in goods, and manager's commission on net profit. So these are the 13 adjustments which you should be knowing, that if these are given in adjustments or in additional information outside the trial balance, which are the places where it be shown. And besides that, you also have to learn the adjustment entry regarding this. Few of the adjustment entries we have already discussed while discussing the chapter journal. Few other new ones we'll discuss. So let us start with the very first adjustment, that is closing stock. What is a closing stock? Closing stock means the value of stock which is given at the end of the accounting period, or we can say the amount of goods lying unsold at the end of the accounting period is known as closing stock. And this we have already discussed while discussing the chapter trial balance, and also while discussing the chapter final accounts without adjustment, that if closing stock is given inside the trial balance, anything given inside the trial balance will be shown at one place only. So if closing stock is given inside the trial balance, it will be shown only on the asset side of the balance sheet. On the other hand, if closing stock is given outside the trial balance as an additional information or as an adjustment, then it will be shown at least on two places. Number one, first of all, it will be shown on the credit side of the trading account as buy closing stock, and on the other hand, it will also be shown on the asset side of the balance sheet. Then remember one thing, children. Sometimes it happens that the value of closing stock, two values of closing stock is given in the question. One is the cost price and another one is the market value. Both the values are given. And obviously we cannot record both the values. Then in that case, the question arises which value to be recorded. So if you remember the chapter gap which we have discussed, in that we discussed one convention, that was convention of conservatism. Now, what is convention of conservatism? It states that we should anticipate or we should record all estimated losses, but we should not anticipate any gains. Basically, it is the matter of playing safe. So therefore, when both the cost price and market price of closing stock is given in the question, then in that case, we will take into account the cost price or market price, whichever is less. Let's say, if the cost price of closing stock is 5,000 and the market value is 2,000, then we will record the closing stock at 2,000. On the other hand, if the cost price is 3,000 and the market price is 6,000, then we will record the value of 3,000. So that means that if the closing stock is given at both market price and cost price, then we will record the value whichever is less. So just let us read from here. Closing stock, it is the amount of goods unsold at the end of the year. If it is given inside the trial balance, remember it will be shown only at one place, that is, it will be shown on the asset side of the balance sheet, on the assumption that it has already been adjusted. And why we are assuming this? Because it is already shown in the trial balance. On the other hand, if it is given outside the trial balance, remember, if anything is given outside the trial balance, it will be shown at least at two places. It will be posted on the credit side of the trading account and also on the asset side of the balance sheet. It will be recorded at the cost price or market price, whichever is less. Now, what will be the adjusting entry? We know that closing stock is the goods lying unsold at the end of the period, so it will be in asset. So we will debit closing stock account debited, and since it is a goods related account, so where will it be transferred? To trading account. So the adjustment entry for the closing stock will be closing stock account debited to trading account, and the narration can be for closing stock transferred to trading account. So this was the adjustment regarding closing stock. Moving ahead to the next adjustment, that is outstanding expenses or expenses due but not paid. If you remember the chapter journal, there we have already discussed that outstanding expenses or expenses due but not paid or accrued expenses. Basically, these are the expenses which have fallen due but have still not been paid by the business. These are considered as a liability for the business. So if the outstanding expenses are given inside the trial balance, it will be shown at one place, that will be liability side of the balance sheet. But if it is given outside the trial balance as an adjustment in the additional information, it will be shown at minimum of two places. First of all, it will be added to the respective expense on the debit side of the trading account or profit and loss account, as the case may be. For example, if the value of wages is given 5,000 inside the trial balance and the adjustment says outstanding wages 1,000. So on the debit side of the trading account, because wages is recorded on the debit side of the trading account. So on the debit side of the trading account, you will show two wages 5,000 plus outstanding wages 1,000. That means in the amount column, you will show the net amount of 6,000 as wages. So this is one place where it will be going. On the other hand, it will also be shown on the liabilities side of the balance sheet. So as you can read here, if such expenses are given inside the trial balance, it will be shown in the liabilities side of the balance sheet. On the other hand, if it is given outside the trial balance, it will be added to the respective expense on the debit side of the trading account or profit and loss account, and will also be shown on the liabilities side of the balance sheet. And what can be the adjustment entry? The same entry which we have discussed in journal. Expense account debited, the respective expense account debited to outstanding expense account. Why are we crediting outstanding expense? Because it is a liability for the business. And why I have written here on the debit side of trading account or profit and loss account? Because if the expense is of direct nature, then obviously it will be shown as an addition to the respective expense on the debit side of the trading account. On the other hand, if the expense is an indirect expense, then it will be shown as an addition to the respective expense on the debit side of the profit and loss account. So this is the adjustment regarding outstanding expense. Moving ahead, the prepaid expenses or unexpired expenses or expenses paid in advance. This means that these are the expenses which have not fallen due. The time has still not come, but we have already paid in advance. For example, if the salary of the next month is paid in the current month to the employee, then this will be a prepaid expense. So if prepaid expense is given inside the trial balance, again it will be shown at one place only, that is on the asset side of the balance sheet. But on the other hand, if prepaid expense is given in the adjustment outside the trial balance, then it will be shown at two places. Firstly, it will be deducted. Remember, it will be deducted from the respective expense on the debit side of trading account or profit and loss account respectively. Why it will be deducted? Because you know that we basically majorly work on accrual concept. That means we will record only the current year transactions, whether in cash or credit. So if these expenses, prepaid expenses, are paid, that means it is already included in expenses, but this amount doesn't belong to the current year. Therefore, to show the net expense of the current year only, we have to remove the effect of prepaid expense, and therefore prepaid expenses are deducted from the respective expense on the debit side of the trading or profit and loss account. So as you can read here, if such expenses are given inside the trial balance, it will be shown on the asset side of the balance sheet. On the other hand, if it is given outside the trial balance, it will be deducted from the respective expense on the debit side of trading account or profit and loss account. If it is a direct expense, then trading account. If it is an indirect expense, then profit and loss account. And it will also be shown on the asset side of the balance sheet, because it is expenses paid in advance, therefore it is regarded as an asset. What will be the adjustment entry? The same entry, the closing entry which we have discussed in case of journal. Prepaid expense account will be debited because it is an asset to expenses account, because this will reduce the expenses actually paid to the actual amount of expenses due for the current year. Moving ahead, the depreciation. If you remember, what is the meaning of depreciation? Depreciation is the reduction in the value of fixed tangible asset. It is a loss for the business, and therefore generally it is shown on the debit side of the profit and loss account. So if the depreciation is given inside the trial balance, that means it has already been adjusted and it will be shown only at one place, that is on the debit side of the profit and loss account. On the other hand, if it is given outside the trial balance, then it will be shown at two places. Firstly, it will be shown on the debit side of the profit and loss account, because it is an indirect basically loss, and also it will be deducted from the value of respective asset. If depreciation is on furniture, then it will be deducted from the value of furniture. If it is depreciation on machinery, then it will be deducted from the value of machinery, so on the asset side of the balance sheet. So as you can read here, if it is given inside the trial balance, it will be shown on the debit side of the profit and loss account. On the other hand, if it is given outside the trial balance, it will be shown on the debit side of the profit and loss account, as well as it will be deducted from the value of respective asset on the asset side of the balance sheet. And what will be the adjustment entry? The same entry which we have discussed for depreciation in case of journal chapter. Depreciation account will be debited because it is a loss for the business, to asset account because it reduces the value of asset, and we know that asset carries a debit balance. So anything which increases the value of asset will be debited. There basically, when the value of asset increases, asset will be debited, and when the value of asset reduces, it will be credited. And as we know, because of depreciation, the value of asset decreases, and therefore asset will be credited. Moving ahead, accrued income or income receivable. Basically, these are the income which has fallen due but yet not been received by the business. That means business has performed the work already, but it has not received the due amount. So it is an asset for the business, because the business has already performed the job. Now it just has to receive the income. So this accrued income or outstanding income, if it is given inside the trial balance, it will be shown only at one place, that is on the asset side of the balance sheet. On the other hand, if it is given outside the trial balance as an adjustment, then there it will be shown at two places. Firstly, it will be shown on the debit side of the, basically it will be shown on the asset side of the balance sheet, and also it will be shown as an addition to the respective income on the credit side of the profit and loss account. But what will be the adjustment entry? The same entry which we have discussed in case of journal. Outstanding income account will be debited because it is an asset for the business to income account. Moving ahead to unearned income or income received in advance. Basically, these are the income which have been received in advance. That means it has not fallen due, but it has already been received. It is a liability for the business, and therefore if it is given inside the trial balance, it will be shown at one place only, that is on the liability side of the balance sheet. On the other hand, if it is given outside the trial balance as an adjustment, as an additional information, it will be shown at two places. Firstly, it will be deducted from the respective income on the credit side of the profit and loss account. Why? Because again, if the income is received in advance, it must have been added in the income, but this does not belong to the current year, and since we follow the accrual concept, therefore we record only the current year transactions. Therefore its effect has to be removed, and we deduct this from the respective income on the credit side of the profit and loss account, and also it is shown as a liability on the liability side of the balance sheet. As you can read here, if it is given inside the trial balance, it will be shown on the liabilities side of the balance sheet. On the other hand, if it is given outside the trial balance, it will be deducted from the respective income on the credit side of the profit and loss account, and will also be shown on the liabilities side of the balance sheet. What will be the adjustment entry in this case? Again, the same adjustment entry that we have discussed in the chapter journal. Income account will be debited. Why are we debiting income? Because we know income carries a credit balance, and since here we are receiving the income in advance, that means this advance amount also must have been included in the income on the credit side. Therefore we have to reduce it by the value of income received in advance. Therefore we will debit it with the amount of income received in advance to income received in advance account, because it is a liability for the business. Now moving ahead to the another adjustment, that is bad debts. What is a bad debt? Bad debt is the amount which could not be recovered from our debtors. It is a loss for the business, and therefore it is shown on the debit side of the profit and loss account. So if bad debt is given inside the trial balance, it will be shown only at one place, that is the debit side of the profit and loss account, as two bad debts, whatever the amount is. On the other hand, the bad debts which is given outside the trial balance or in adjustment is known as further bad debts, the new bad debts. So the bad debt which is given outside the trial balance, or we can say the further bad debts, it will be shown at two places. At first place, it will be added to the old bad debts on the debit side of the profit and loss account, and on the other hand, it will also be deducted from the value of debtors on the asset side of the balance sheet. So as you can read, if it is given inside the trial balance, it will be posted on the debit side of the profit and loss account. The bad debts given outside the trial balance will be considered as further bad debts and will be shown and added to the amount of bad debts on the debit side of the profit and loss account. It will also be deducted from the amount of debtors on the asset side of the balance sheet. Now the adjustment entry, the same entry for bad debts which we have discussed in the chapter journal. Bad debts account will be debited because it is a loss for the business, and we know that we have to debit all the losses, and because of the bad debts, the amount or the value of debtors, that is asset, would decrease, and therefore we will credit to sundry debtors. Moving ahead with the provision for bad and doubtful debts. What is the provision for bad and doubtful debts? Again, any kind of provision, whether it is for bad and doubtful debts, or for taxation, or for discount on debtors, etc. All such provision means, we have already learned the chapter provision and reserve. So what is the provision? Provision is an amount which is set aside to meet any known liability. We know beforehand that if we are having debtors, definitely sometimes it will happen that there might be some debtors who will fail to pay the or return the amount, and therefore there will be a reasonable amount of bad debts that is expected by the business due to convention of conservatism, that is due to playing safe. So such amount which is kept aside as bad debts provision is known as provision for bad and doubtful debts, because it is doubtful, therefore it is a provision kept separately. So the provision which is given inside the trial balance, the provision for bad and doubtful debts which is given inside the trial balance, is better known as old provision, and the provision for bad and doubtful debts which is given outside the trial balance as an adjustment is better known as new provision for bad and doubtful debts. So first of all, let us discuss what is to be done with the new provision. So the provision for bad and doubtful debts which is given in the adjustments outside the trial balance, or we can say the new provision, it has to be added to the value of, again, if it is given in adjustment, that means it will be shown at two places. So first of all, it will be added to the value of bad debts and further bad debts on the debit side of the profit and loss account. On the other hand, it will also be deducted from the value of debtors minus further bad debts. That means after deducting the amount of bad debts given in adjustment from the value of debtors on the asset side, thereafter the new provision given in adjustment will be deducted from the value of debtors, and then we will show the net amount in the amount column. Now coming back to the old provision, the provision which is given inside the trial balance, it will be shown only at one place and it will be deducted. The old provision will be deducted from the total of bad debts, further bad debts and new provision on the debit side of the profit and loss account. So as you can read here, if it is only given inside the trial balance, it is known as old provision and is shown as a deduction from the total of bad debts and further bad debts on the debit side of profit and loss account. If it is given in adjustments, it is known as new provision and will be shown on the debit side of the profit and loss account as an addition to bad debts and further bad debts. At the same time, it will also be deducted from debtors on the asset side. And which debtors? After deducting further bad debts. Adjustment entry. The adjustment entry will be profit and loss account debited to provision for doubtful debts account. Why are we debiting profit and loss account? Because this is a charge against profit. And why are we crediting provision for doubtful debts? Because it is an amount set aside. It is kind of a liability which cannot be used for any other purpose. Now there are certain points which you need to remember for solving questions on bad debts, provision for bad debts and provision for doubtful debts. Number one, if provision for bad debts is given in percentage, that means if the absolute amount is given of provision, then you need not calculate anything. You just have to utilize the absolute amount given in the question. But if the provision for doubtful debts or for bad and doubtful debts in the adjustment is given in respect of percentage. That means, for example, create 5% provision for bad and doubtful debts, create 10% provision for bad and doubtful debts, etc. Then on which amount is this percentage to be calculated? So it will be calculated on the amount of good debtors. That is debtors minus further bad debts given in adjustments. If there are no further bad debts given in adjustment, then no problem. We will calculate this on the value of debtors only. But if there are further bad debts given in the question, then this new provision percentage will be calculated on good debtors, that is debtors minus further bad debts given in adjustment. Number two, if no information is given regarding new provision to be maintained in the adjustment, the old provision given in the trial balance will assume to be the new provision. That means if no information is given regarding the new provision, how much is the new provision, then in that case we will assume the new provision value to be equal to the value of old provision, and then we will be doing the calculation accordingly. The third point, any old provision for bad and doubtful debts given inside the trial balance is shown on the debit side of the profit and loss account as a deduction from the subtotal of bad debts, further bad debts, and new provision for bad and doubtful debts. This we have already discussed. Now, very important point, children. It is a very rare case, but again it can happen. When old provision given inside the trial balance exceeds the total of bad debts and new provision, we know that the old provision which is given inside the trial balance is basically deducted from the subtotal of bad debts, further bad debts, and new provision on the debit side of the profit and loss account. But rarely it might happen that the value of old provision is much more greater as compared to the subtotal of these three items. Then in that case, obviously if you deduct the greater amount from the smaller amount, you will get the amount in negative, in minus. Then how can you show a negative amount on the amount column? In that case, what you will be doing, you will be transferring, you will be posting the entire items of bad debts, further bad debts, new provision and old provision on the credit side of the profit and loss account with the reverse calculation. What does the reverse calculation means? That what you were adding, now you will deduct, and what you were deducting, now you will add. So instead of starting with bad debts on the credit side, you will start with the old provision because that is the greater amount. So on the credit side, you will show by old provision, whatever the amount is, minus bad debts, minus further bad debts, minus new provision, and then whatever the net amount is coming, that will be posted on the credit side of the profit and loss account. So as you can read here, if the old provision is more than the total of bad debts and new provision, the balance will be shown on the credit side of the profit and loss account with reverse calculation. In such a case, the amount of bad debts, further bad debts, and new provision will be shown on the credit side of profit and loss account as a deduction from old provision for bad and doubtful debts. New provision, as usual, will also be deducted from sundry debtors on the asset side. That means there will be no change in the treatment of the new provision, but only the treatment of old provision and all will be changed on the credit side of the PL account. Now moving ahead with the provision for discount on debtors. Now this is a separate provision. Sometimes it happens that one is that you are expecting that some debtor might become insolvent and the amount might not be recovered from him, and therefore you create a provision for bad debts. But sometimes it also happens that maybe we know that there is a type of discount which is cash discount, which is given mainly for facilitating prompt and quick payment, and therefore it might happen that sometimes business has to offer a deal of giving cash discount so as to recover the cash payment quickly, and therefore the business has to be prepared for such amount of cash discount allowed, and therefore it also creates, besides creating a provision for bad and doubtful debts, the business also creates a provision for discount on debtors. And this provision is calculated on the amount of actual debtors which is expected to be good. That means none of them will become insolvent or no amount will be bad debt. So that is quite obvious that if the amount of provision for discount on debtors is given in absolute amount, then we can do the calculation with absolute amount. On the other hand, if the amount is given in percentage, then this percentage for provision for discount on debtors will be calculated on the amount of debtors after deducting further bad debts and new provision for bad and doubtful debts. That means this will be the last item to be deducted, to be calculated and deducted from the value of sundry debtors. If provision for discount on debtors is given outside the trial balance, then it will be shown at two places. First of all, it will be shown as a separate item on the debit side of the profit and loss account. On the other hand, it will be calculated and deducted from the net balance of debtors after deducting further bad debts and new provision for bad and doubtful debts. So as you can read here, if provision for discount on debtors is given in adjustments, it will be shown on debit side of profit and loss account as a separate item. At the same time, it will also be deducted from the value of debtors on the asset side after deducting further bad debts and new provision for bad and doubtful debts. If the rate of provision for discount on debtors is given in the question, it will be calculated, as we were discussing, it will be calculated on the amount of good debtors after deducting further bad debts and new provision for bad and doubtful debts. Now the adjustment entry, what will be the adjustment entry for this, children? Profit and loss account again will be debited because it is created out of profits. To provision for discount on debtors account, because again it is an amount kept aside for a particular purpose and it cannot be used for any other purpose. So all these 9 adjustments are, I hope, are clear to you. Just go through the video once again, children. Revise all the adjustments. Which place does it go, and if the amount is to be calculated, then on which amount it has to be calculated. Go through all the adjustment, children, discussed till now. It is very important chapter for you. Now this is the assignment based on this part, children. You have to answer the following questions in your register. You have to state the treatment, that means which item will be shown where, and adjustment entry for the following transactions if they are given outside the trial balance as an adjustment. So number 1, closing stock. What is the treatment for closing stock as an adjustment? First of all, it will be shown on the credit side of the trading account as buy closing stock, and on the other hand it will be shown on the asset side of the balance sheet. And what will be the adjustment entry for the closing stock, children? Closing stock account debited to trading account. Secondly, outstanding expenses. Now, where will it be shown? What is the treatment? Outstanding expenses will be added to the respective expense on the debit side of the trading account or profit and loss account. And secondly, it will be shown as a liability on the liability side of the balance sheet. Now, what will be the adjustment entry for the outstanding expenses? Expenses account debited to outstanding expenses account. The third one being the prepaid expense. Prepaid expense, first of all, will be deducted from the respective expense on the debit side of the trading or profit and loss account, and on the other hand it will be shown as an asset on the asset side of the balance sheet. Then what will be the adjustment entry for this? The adjustment entry will be prepaid expense account debited to expenses account. Then the fourth point, children, fourth one is depreciation. What will be the treatment for depreciation? Depreciation, first of all, will be shown on the debit side of the profit and loss account, and on the other hand it will be deducted from the value of respective asset on the asset side of the balance sheet. And what will be the adjustment entry for this, children? The adjustment entry for this will be depreciation account debited to asset account. Then the fifth one is accrued income. What will be the treatment, children? It will be added to the respective income on the credit side of the profit and loss account. On the other hand, it will be shown on the asset side of the balance sheet. Now, what will be the adjustment entry for this, children? The adjustment entry will be accrued income or outstanding income account debited to income account. Then 6th point, unearned income or income received in advance or pre-received income. What will be the accounting treatment for this, children? It will be shown as a deduction from the respective income on the credit side of the PL account, and it will also be shown as a liability on the liability side of the balance sheet. What will be the adjustment entry for this, children? Income account debited to unearned income account. Then the 7th point, bad debts. Where will it be shown? These are the further bad debts because these are given in adjustments. It will be shown on the debit side of the PL account. It will be added to the old bad debts if any, and on the other hand it will be deducted from the amount of debtors on the asset side of the balance sheet as further bad debts. And what will be the adjusting entry for this? The adjusting entry will be bad debts account debited to debtors. Then the 8th point, provision for bad and doubtful debts. If provision for bad and doubtful debts is given in the adjustment, these will be known as new provision. It will be added to the total of bad debts and further bad debts on the debit side of the PL account, that is profit and loss account, and on the other hand it will be calculated and will be deducted from the total of sundry debtors minus further bad debts. Then the last one, provision for discount on debtors. Before discussing this, let us discuss the adjustment entry for provision for bad and doubtful debts. The adjustment entry for this will be profit and loss account debited to provision for bad and doubtful debts account. Then the 9th point, provision for discount on debtors. It will be shown as a separate item on the debit side of the profit and loss account on one hand, and on the other hand it will be deducted and calculated from the value of debtors after deducting further bad debts and new provision for bad and doubtful debts on the asset side of the balance sheet. So these are the questions which you need to do in your register, children, and also go through the video and revise the topics once again. Thank you, children. Take care.